free to the public Algo Factory Live Lab. So what we do is we have some basic conversations. We see if there are questions we can answer from people who might be new to trading, and they might have some basic questions. We see if we can answer them. Just so you know, Algo Factory, what we do over there is we help people become traders. So we take people of all skill levels and we help them become traders. We help them improve their trading game. And we help them build trading algorithms. And then algorithms themselves are just a trading method. That's it. So it's not like you have to necessarily have it hard-coded or be like a coder or have some supercomputer, some Superman skills. And no, it's just basically anybody who's ever successfully traded is probably using an algorithm of some sort. And it's just a method by which they trade. It's a method that they always use, every time they trade, kind of thing. So, that's what that is. And we help people build those. And we just don't want you to get scared of that word algorithm. One thing we do not do is we don't dispense investment advice. So you got to contact your licensed investment advisor before risking your money on the markets, because that can be risky. It can be dangerous. You can lose your money that way. So let me see here. It's Monday morning. So today is going to be just a basic market look. We'll see if there are any questions. Before I get too far, I'm going to let a few people file in to the show here, to the chat. As a matter of fact, I think I need to go ahead and stream over onto our other platform here as well. Okay. And I'm going to take the link from the show. I'm going to go ahead and send that out to one of our Discord channels. So give us just a moment there. Listen to our nice, happy music here for a minute. Let's see here. Okay. Gotta find the link. All right, here we go. Got the link over to Discord. There we go. All right, well, let me take a quick look at the comments in either YouTube. We got a few people on YouTube. If you want to come check us out, go ahead and take a look at the comments. I'm going to type in our address here. algofactory.tech, www.algofactory.tech. That's one way to get there. Is you just follow the URL that I put up on the screen. The other way about it is to go check out our QR code. So here's the QR code. Right there, you can zap that with your phone if you're, watching on the computer. And, if that's how you're watching this, that'll take you straight to the website on your phone. Or if there is a way to read that QR, somehow on the screen, maybe you have like an app or something that does that. Otherwise, we have the URL, www.algofactory.tech. So that's what's going on. Let me see if we got anybody talking in our private group. Might have some questions already. Let's see here. Okay, we got people watching anyway. We got Robot. I think Brad Be Good might be in there. We do have a few people who are watching. It's this is the quiet time of the year. Okay, so summertime, there's like low volatility. It means that there's not a lot of people in the market. And as you approach August, which we're almost there, you have a lot of people who are taking vacation. So basically the whole world, well, at least the West, is still kind of operating based on the old farm model. It's all around the harvest. And a very long time ago, everybody were farmers. Half the country was farmers, if not more. So the late summer hit, and you had harvest, and people were out of school, and that's just how it was. And then that continued throughout the 20th century, and it's just kind of become the way things are even your year-round schools usually have like a month off, if not more, during the summer. So that's what's going on. By the way, we don't have the gorilla here this morning. Not sure. Hope he's okay. Not unlike him to not show up or not show up without some kind of explanation. So we are hoping that he is okay. Maybe he slipped on a banana peel, hit his head on his tree or something like that. Who knows? But we're just gonna go ahead and hope he's all right. And for the moment, I'm going to go ahead and leave it open to some questions, see if anybody has any charts they want to see. We did just have some economic data come out, so until I see a question, we'll kind of discuss that. Brought up on the screen, this is forexfactory.com, and this is the calendar. Now, this data is over on TradingView, and TradingView is the software that we use to trade, right? So you can go and see it in TradingView, and TradingView actually has a free version for brand new traders who want to kind of learn the system. But even their paid, versions are very inexpensive. And but this is the actual calendar that I like to use, probably just because I've been using it for so long. And it's forexfactory.com/calendar. And so I like to trade Forex and cryptocurrencies mostly. I will trade small cap stocks and precious metals. I like to trade precious metals as well. You have to find out whether or not you have the jurisdiction that allows you to trade them and that kind of thing. Some people will actually trade like gold miners as a way to access the precious metals market. So because sometimes you can't, like if you're in the United States, you cannot trade CFDs. So your option is to trade the miners. At any rate, the USD, the dollar, is still king and controls everything, and that applies to stocks, crypto, Forex, and in particular, Forex is going to be most affected by the dollar because that is a currency trading game. It's the largest market in the world. You can go long, you can go short, and basically it's going to have a lot of volatility, kind of like crypto does. And in fact, cryptocurrency and that model is based on Forex. It's currency pairs, right? So Forex Factory, even though we are talking about Forex metrics because we're talking about the dollar and we're talking about economic data and the Aussie dollar and the loonie, the Canadian, all these things, it all affects the whole market because everything's based on currency. So even if you're a stock trader or something else, this data is going to help kind of what I do is I use this data to avoid trading mostly. I don't try to predict this data, or I'll say, oh, I think this is going to happen with the Empire State Manufacturing Index. I think it's going to be, higher than they expect, and this is going to push prices, up or whatever. I don't see that. I don't do it that way. I usually wait for the news to pass because a lot of manipulation can happen during these economic data announcements, right? So word on the street is that the banks use these announcements to really mess around with the data and to stop people out of their trades and do what's called stop runs. It's a way to kind of mess with liquidity. And so I tend to wait at least 15 minutes, usually maybe even longer, depending on the magnitude of the announcement. And I wait till that passes by, and then I go ahead and look for the technical market to unfold. And here at Algo Factory, we are technical traders. So that's what we do. Your day traders, swing traders, they tend to be technical. In fact, I don't know any kind of traders that are I know investors who are fundamentally minded, but I don't know a lot of traders who are fundamentally minded. You do have your kind of news junkies where they have some weird method to follow news events and trade them, and they'll tell you they're successful. And I knew one dude that actually was successful trading the news, although he was trading millions of dollars, and he had some pretty high level software that allowed him to actually move the market. So, unless you're trading with like 20 or $30 million, then there's a pretty high probability that trading the news is not going to work out for you. But hey, man, if you develop an algorithm that allows you to trade the news successfully, don't let my comments stop you. It's none of my business. What we do is we develop algorithms here. We develop methods that allow you to trade whatever your method is successfully. And if that happens to be the news, if you happen to be in the category of the very, very few people who can trade the news successfully, then by golly, go ahead and do it. We got Valley Girl in the chat saying a magnificent Monday morning to all of you out there in Legoland. Let's get building. Yeah. So Valley Girl is a newbie trader, actually a novice trader, I should say. And she is really coming along, going through our online courses, and just she's in the shows every day. I imagine if Valley Girl, if you're not in the shows, I imagine you catch the recording afterward. We have a catalog of all the recorded shows going back months. So, that way people who perhaps didn't have a chance to see it live, they can just go and, watch the show on the recorded versions. So at any rate, we're happy to have you, Valley Girl, and thank you for the shout out. Okay. So let's take a look. Empire State Manufacturing Index. What is that? Okay. So that is a Federal Reserve Bank data. Okay. It measures the level of diffusion index based on surveyed manufacturers in New York State. And it's going to be treated as a bellwether for the rest of the nation for this kind of data. And if the actual is greater than forecast, it is good for the currency. And the actual was much greater than the forecast. It came out at 1.1, and the forecast was minus 3.5. And I think this is a month over month. It's released monthly, so it's going to be you're going to look at the prior month as comparison. So it was expected to be a lot worse than it is. So if that's the case, here it is. Above zero indicates improving conditions. Below indicates worsening conditions. Just above zero. And there's some mixed data. I know CPI is actually falling, but then you had a couple other metrics that are like rising, and that were okay. CPI falling usually is the whole idea of raising the rate was to try to push inflation down. And that's fine. Usually that's going to coincide possibly with unemployment going up, but the unemployment numbers last week and the inflation numbers were both kind of going in positive directions. It's hard to say how the Fed's really going to look at this. And a quick good morning, Jacob Walbert. Good morning. Good to see you on here. And then I'll throw out this from Valley Girl. Also had a nice comment for us there. So I'll bring up the data from last week just because the whole Fed speak right now. Oh, I guess I need to go back in the calendar. I'm not going to mess with it. The whole Fed speak right now is, okay, we're raising rates so that we can push down inflation. That's what everybody is saying right now. That's what the word is on, Jerome Powell's coming out. We're going to keep hiking rates until inflation comes down. Well, inflation has supposedly come down. The number was 3 point something, which month over month was actually lower than the prior month, whatever it was. So with that considered to be positive result, a lot of the market is thinking that the hikes are going to be halted. We have FOMC next week, the Fed Open Market Committee next week, and they're going to discuss whether or not they're going to raise the rate, the prime rate. Now, the more expensive money is, let me back up. The higher the rate, which they've been hiking rates all year long now. In fact, I think they've been hiking it since last year. So the higher the rate, the more expensive money is. The more expensive money is, the less investment happens because everything is based on debt. So people aren't like saving money to invest it. People are borrowing money to invest it, by and large. So the more expensive money is, the less investment there is, and the less investment there is, the less the markets go up. And so as they continue to hike the rates, the concern is that because money is getting more expensive, then we're going to see less investment and the market goes down. Well, now we're seeing the inflation fall. And because inflation is falling, that is signaling that we'll see less hikes in the interest rate and perhaps some cuts coming in the future. Whether that's the near future or the far future, that's hard to say. But that's the expectation, right? That's the math that everybody's doing in their head. And so if inflation drops, everyone's like, oh, the cut's going to happen, or no hikes are going to happen. And people get very excited and they start putting money into the market. The market goes up. And the effect in the currency market is going to be that the interest rate going up means that the dollar is going up and every other currency is going down. So if you're trading against the dollar, say like with the EUR, then let me maybe make this a little easier to see here. And we'll go to a higher time frame chart, much higher. I'm going to go to basically the daily chart here. So the euro really went, the euro had some historical lows. So I think the rate hiking started in 2021, and you'll see that the euro went all the way down from like $1.25-ish all the way down to below parity with the dollar. That's all the way down to 96 cents. That is a 30% or more fall in the euro as compared to the dollar, and that had to do with the rate hiking cycle. Okay, now this is over the macro. You're looking at 2 years worth of data, 2021, 2022. So this is 2 years worth of the data, and during this hiking time, everything fell. But you'll notice that I think the other currencies were also started to hike. So you're going to see not necessarily a straight fall, but because the dollar is the reserve currency and used by pretty much everybody else. Yo, what's up, Cool Cat? Yeah, the Grand Rising. Cool Cat, are you talking about an astrological event, or are you talking about a financial event, or both? But at any rate, so as everything kind of evened out, now you have the USD, and it's actually on a downslide. If you look at this is the euro versus the dollar. Okay, so after everything went to below parity back in September of last year, down to 95 cents, or I'm sorry, what is it? 95 euro for $1, which is like historically amazing. That hasn't happened in decades. Price started to make its way up. I know the Europeans started hiking their interest rate, and there might have been word that we were going to kind of calm down on our hikes, but you see price starting to make this trend upwards. Right, so higher highs, higher lows. So now, is price going to kind of drop like this? It may very well. My metrics aren't ready to call that out just yet, but under any circumstances, we are looking at a current uptrend in everything besides the dollar, or at least in the euro versus the dollar in this case. So, it may be that price tires out up here, starts to head in the other direction, and that's the euro against the dollar. Now, the dollar, of course, we had the skip last month, and so, basically the skip is where they did not hike the rates last meeting. So it was almost a month ago. It's like 3.5 weeks ago. So basically at that point, with the skip, a lot of the people in the market was like, oh, we're not going to raise rates, and everything's going to be good, and maybe they're even going to start cutting. Everybody got very optimistic about the market as a whole, and you can actually see that in a lot of the other markets. Let's go over to the S&P 500. In fact, I think this will be kind of a good exercise in what happens with fiscal policy to the markets. Okay, so I'm going to go to the monthly. This is Disney. We're not going to look at Disney today. Let's go to the SP 500. Okay. So this is a monthly chart, and this is something I forecasted. This is what you see. This is what I think will happen. I think the SP 500 will continue to head up. And I put this way up here. I don't know how high it's really going to go, but I think we'll see either a touch, like a test of the high right here. This was the highs of 21. And I think we'll see a test of that in a dump, and that might happen later this year. Or maybe it'll poke above that and kind of get a lot of people interested in buying heavy, and then they'll just get the rug pull. Or perhaps price may not make it up there at all. I mean, it really depends on how fast things happen, how quickly they can put money into the market. As it stands now, though, everything looks rather bullish from an algo standpoint, right? So I do think that this prediction of the S&P 500 is a decent prediction. But to look at the macro, we talked about the rate hiking, and let me see if I can bring up a chart of that, just so we can have that pretty handy. Fed rate hike chart. Historical. Let's see here. Last time I looked for this, it was funny. I couldn't get past like 2017, which is really odd. Let's see. Prime rate 2015, 2017. Okay, this is Fed rate hike chart. Where are we here? Okay. Well, I wonder if I could go to the Fed. Well, here's a dot plot anyway. Let's see how good this is. So the dot plot is a good way to look here. All right. Let me just open this in a new tab and zoom it in. A lot of people think the terminal rate is going to be, say, around like the 5%, right? So this is the dot projections for meeting dates. Okay, so this is going back to 2021. So this is grossly underestimated. You can see that this was created back in 2021, and they expected some hikes, but this is only up to 3%. And I think the Fed funds rate is actually now at 5.25% or something like that. This is interesting to see this. This was a forecast from last year. And of course, what happened during the pandemic, lots of money printing, stimmies, people not going to work, people throwing their money in the market. And actually, one of the main reasons we had inflation was a supply chain breakdown. So basically, a lot of the items that we use became more expensive because we could not get them around the world in the normal way that we were getting them. So it cost a lot more to actually have goods and services. Okay. So a lot of people think, oh, we printed money and that's why the inflation happened. And actually, one of the biggest reasons is supply chain issues. So, but this particular chart is not going to help us. Let's see if the federal funds rate. See if I can just go to wikis. Bonds and inflation. Okay, here we go. It's pretty good chart on wikis. So going into 2022, you can see that we have this hike up. So the hikes really started in, it looks to be Q2 of 2021. So we'll go back to our chart here, and we can see that the rate hiking started in early to mid 2021. So maybe around here. And the market ended up kind of, meeting its maker at the end of 2021. And a lot of times the market throughout the year, you don't really see, you'll see a pullback in, say, September or October. And again, you're looking at a chart right here that it's a monthly chart. So each one of these candlesticks is a month's worth of price action. And generally there's a run up to the end of the year and then everything falls. Well, in this case, in 2022, everything started to fall right in January. And the prices and the whole market really started to take its tumble, and it continued to tumble through the whole year of 2022. And then 2023 is when you started to see things start to come back. Now, the question, of course, on a lot of traders' minds is, okay, is this, is the rate hiking? It makes sense for this to happen because of the rate hikes, right? But at the same time, is this a bear market rally that we're seeing? Is this, kind of happening here because, we're still hiking rates. Why is price headed up? Well, it may be because there actually is still some very quiet quantitative easing, even though we're supposed to be in a tightening cycle. I did a show on the Rogue channel about 2 weeks ago that discussed that. Okay, so, but long story short, this hard move down was the result of the initial rate hiking cycle. Now, after this could be a bear market rally. It could be, money coming into the market quietly. But under any circumstance, the rate hiking is why you see this kind of move down right here. That's probably the biggest reason. Okay, a lot of profit taking, a lot of repositioning, and then the big money, of course, they know this is coming, and they get out of their positions, and then they go long on the bottom. Or a lot of big money is so big they actually have to kind of go into other positions. They can't just undeploy, but they will certainly deploy in a better sense, or they'll undeploy and redeploy down towards the bottom. And of course, we went down to 3,500 on the S&P, now back to 45. So that's like a 30% rise. It's beautiful. Anybody you got in the bottom there. But at any rate, it is now at the end of the live session. So, today was just general market talk, and it was based on the news. And I wanted to talk about the rate hikes because that does affect, when you're trading, you need to know which way the wind's blowing. And if you want to know more about how to know which way the wind's blowing, or how to take that information and incorporate it into a trading algorithm, please head over to algofactory.tech. I'll put the URL up on the screen, and I'm going to go ahead and throw up the, the QR code. So it's algofactory.tech. That's terrible. Ha! I misspelled it the whole time. It's let me do that for real. Hold on. Algofactory.tech. Oh, that was terrible. That's how it's properly spelled. Algofactory.tech. And you can take a look at the, this might be easier for some people. Just go ahead and zap the QR code on the screen. And enjoy your morning. If you have any questions, you can ask them on YouTube. You can put it in the comments. You can always come and email us. If you go to the website, there is a contact us on there if you have questions about what it looks like, what we do. And that's how that works. All right. So enjoy your day.